Hi everyone, this is Michael Benguiat with Lifetime Investor, and this is the Stock Picks weekend review video for February 18th, 2023. Hope you guys are all having a great 3-day weekend and enjoying life with, outside of the stock market. Let's go ahead and just get started. So I'll make this video super long. We're going to talk about the current market environment first, then our stocks in our portfolios, and the watch and ready list stocks. So right off the bat, we haven't really changed the environment. It's still yellow caution, and our best strategy is still short-term swing trading because we're just not getting yet a lot of big moves out of leading stocks. It's improving. We're getting some that are going up, double digits, 10, 11%, but they're few and far between. We're still getting a lot of volatility that's kicking out stocks, especially around earnings. Unfortunately, this has been earnings season, and there's been some pretty big downside to stocks, or just a lot of volatility. A few of our stocks have just dropped off the list because of the volatility. So that's why we're still in that cautious area. So the good news, though, we're not seeing a lot of the stocks breaking down, and we're seeing more holding, and that's a major improvement because that's something we haven't seen for quite a long time. Again, the bad news is that the volatility is really high and it's whipsawing stocks all over the place. So we just continue with the yellow light, and hopefully it will improve. So let's go ahead and take a look at stocks on our growth portfolio. So the first one is Quanta Services, and they do specialty contracting and related services to the electric power, gas, and pipeline industries. So they're sort of heavy construction. And we had the breakout that we bought over here, and it's just, again, this is typical. We haven't really been able to get anywhere. The sellers just kind of been lurking around, 158, 157, just kind of push it down. Now, we have had, in the overall market indexes, kind of a little bit of down days. We've just been pulling this down. So far it's not doing anything wrong, but we do have earnings in 5 days. And that's, I think, we're hoping to get a little bit of a cushion here. Right now, we are just slightly down. No, I'm sorry. We are up 0.28%. So we'll see. When the time comes whenever the earnings are going to come out, I'll run there's a way you can actually see sort of what the expected volatility is using the options market. And we'll be doing that, and we'll post that if it's something we're going to hold. We'll see. If we're already substantially negative on the position, we'll have to just bail on it. Unfortunately, that's what's happened. Some of them, like what was the one we had something we sold and it just blasted off. That's what happens. But we're just trying to reduce risk, and there's been some pretty big downside and pretty big upside to holding positions. But we like to have at least some cushion. If it's low volatility, like sometimes it's like 3 or 4% is what the expected move is, and we might just hang on to it. Our stop is, let's see what our stop is. We're at 150. Yeah, our stop is pretty close. We're trying to keep this pretty tight just because of the market. So we'll see. We'll see what happens there. But it's doing absolutely nothing wrong yet. The RS is 90, not fantastic, but it's you can see it's almost like a big consolidation here. And then it kind of tightened up, which we'd like to see, and now finally broken out above most of this area here, except for this 155. So really not doing anything wrong. Earnings have been pretty good across the board, and sales. So it looks strong. We're going to hopefully hang on to that one, and we'd love to get a nice gain out of it. The next one is Diamond Offshore Drilling. Ticker is DO. This one, again, hasn't really made much of a move. It's having a struggle getting above about 1250 or so. This one actually came down and made a new low for the move down to the 21-day, but it bounced and closed up sort of in the mid-range. Let's see where it is. Yeah, 52% closing range, which is supportive. So somebody stepped up there and a little bit higher volume. So the higher volume, but a supportive day is actually a positive, even though it was a down day, down 2%. So it's doing nothing wrong. Again, earnings are coming up. Again, we're hoping. Sometimes we've been seeing a lot of stocks just like this go ripping higher in front of earnings, and we'd love to get that. And depending what happens, we would maybe, if we're up enough, we'll just hang on to it and see what happens, or we could sell a little bit to finance any downside risk. But again, this is doing nothing wrong. This is actually a nice supportive day, kind of kicked out a few of the weak holders. Our stop was, let's see, where's our stop on this? 11.15. Yeah, our stop is actually down below here. So we were nowhere near getting stopped out. So this was supportive here. Eventually, we may be able to move our stop up below this bottom here, reduce the risk of loss there. So looks pretty good. The next one, XLB, which is the materials ETF, has been really acting the worst. We really haven't seen much of a profit in this ever. We're down about 3%. We got pretty near our stop, but we didn't hit it. But the stock's getting support of the 50-day. You can see it just kind of was a little higher, a little lower on Friday and closed right at it. 2 other days here it got support. Another day back here in January got support. So we're just hoping that this holds and we get a bounce pretty soon. If it breaks below it, then yeah, we'll probably end up losing that. So that's our weakest position. But so far, it's really not doing anything wrong. We're not getting massive volume on the downside. All the volume's a little bit lower. So now the RS has been dropping 52. That's a little bit of a warning. So well, we'll see. But we do try to get a little mix of ETFs and individual stocks, and that's what happens. This is the market we're in. You try different things, different sectors, and we're just not getting a lot of confirmation, and that's why we've been cautious. So ADP, we just bought this for our long-term outperformer portfolio, and this was one we're actually buying it right at this 21-month moving average. That's this pink line here, and you can see for most of this move from 2011, you can see it was always getting support. Whenever it came down there, it got support. 2015, we did have a big break, but in the end of the month, it closed right at it. A few other times here, we got below it, but it's the close is always most important. Like even here, you can see we had a big down. This was the coronavirus crash. Even though it went low, it came in closed right at the 40 month. So that was the only time it really broke, and we hovered around there. You can see these moving averages are important, and you don't hear much about the monthly moving averages, but they are very important. So anyways, once we got back up from the coronavirus crash, we got support numerous times right at this 21 month. Now, so it's looking pretty good. This is what the long-term outperformer charts look like. We should get a bounce off of here, and off we go. Again, these stocks are just, they're not huge movers usually. They just kind of continue up over time. If I go to the daily chart, you can see just, pretty good earnings, just solid earnings, month after month, quarter after quarter. You can even see it just from the annual earnings, 3 to 4 to 5 to 6 to 7 to 8. They're almost at 9 next year. So that's what they're doing. They're just good, solid, dependable earners, and they usually just continue higher. So it's looking pretty good there, but we have had a long period where we couldn't find anything to buy, just because I mentioned this a few times, many of the stocks that traditionally are on these lists were the tech stocks that just got pummeled, and they just disappeared. Here's the great example. I can't think of the ticker of the sorry, now I'm blanking on the one. Let's see, Dava. I don't think Dava was one of them. No, that wasn't one of them. MSCI. So here's one. Yes, you can see, again, from 2013, this didn't even come down to, except for a few times, to that 21 month, and really just made a nice move, continuously going up and up. Then it busted it, and now we're starting to come back down. It did get support of the 40 month, and then we've sort of bounced back up there. But there's a lot of them. This is one of the better ones, but there's some that just did this and just busted below all of them. So that kind of made the run over. In hindsight, yes, this would have been a good buy at any of these 40-month moving averages. But remember, this was in the period where we're just a lot of just carnage going on. This is the same time if you look at, PayPal, things that you would have thought, well, I'd never see this from some of these big names, but that's what they did. Okay, so let's move on to back to the daily charts. Let's take a look at Bel Fuse. The ticker is BELFB. This stock has been acting really, really well. It's a relatively thin stock, just 73,000 shares, but it's really acting pretty well, and it's one to watch. And its earnings are in 4 days too, so we're just kind of, even though it's on the ready list, we're not going to be buying it here that soon. But you can see it's just made a couple cup patterns, breaking out. Another one we've broken out, had a lot of volatility here. So, but nothing wrong with that. But it's been really acting pretty well. Going to the weekly chart, it's really just finally broken out into new highs. And then if you go over here, this is a monthly chart, and we are actually now right at those periods where, in other times in 2004 and 2007, where that was the peak. So it's kind of a crucial time for the stock. Just from the angle of ascent here and the volume picking up, I would not be surprised to see this just blast off. It seems like they're doing a lot of acquisitions too. I noticed they recently bought another company, or they took a position in it. So I think this company is growing really well. They're in the electronic parts area. So maybe that's why this has actually made a double since August. So that one's looking pretty good. Lamb Weston is the next one. This one's a good lesson. I've talked about this before. If you've been with us for a while, you're going to see the same names come up. Sometimes they appear in the watch list and they disappear, and then they're on the ready list. Sometimes they break out, and we may have bought them and sold them, or maybe we didn't buy it for whatever reason because we had other positions. But this is this one's been on and off the list, and you can see why. It just continues going higher, and now I think we're at all-time highs. Yes, we're at all-time highs now. And the thing is, you think, well, okay, basically their product is frozen potatoes and sweet potatoes. So you think, what kind of, that just sounds like a defensive name. Why would you want to own that? It doesn't do anything. But look, this has gone up 100% since March. So less than a year, you got 100% move. So you never know with some of these stocks, and the earnings are very strong. We're starting to go a lot of years of about 2, and then suddenly we're at 4, and now we're at 4.5. So something's going on with frozen potatoes. And the earnings look triple digit here, the last two quarters. So, and this one, yes, just breaking out of this nice little tight area. And we bought that just coming out of there. Where'd we get it at? Let's see. Oh, sorry. No, we didn't buy that. I'm sorry. We ended up buying, Quanta, and I didn't want to have any more exposure. But that's totally buyable right here. Earnings have passed too, so that's a good sign. You can see that was a big jump up in earnings. And another little hint here, notice how we had a big move on earnings, and then there's nobody really selling. I mean, we had a little dip, but it never even got below the day of the earnings and just tightened up. So what is this telling us? That whoever owns this is comfortable with it and doesn't think that that's just a flash in the pan, it's going to go back down. And there's nobody really stepping up to sell it. In fact, we're getting tighter and tighter right at the highs, and now we're starting to move out of there. That's what we want to see, and strong, good relative strength there too. Okay, let's see the next one. I have to go a little quicker here. Oh, next one is Quanta Services. We talked about that already because we own that one. And then the next one is Haleon. It's a UK company that develops, manufactures, and deals with consumer healthcare products. Now, this is a recent IPO just from the last year, and formed this big cup and then kind of an extended handle, a little odd there. But if you kind of look at it more like this is like another, just kind of, here's your cup, and then we have a base on base. And you can see here, we're getting that pattern we always like to see. We came up, if you kind of draw a line here, let's see if I can do it here with these. So we have a little contraction here, and then we got even tighter here, and then we got even tighter here, and then we, so you can see it's just right at this highs. This was the area, about $8, where it just couldn't get above there. And in fact, let me see if I can draw a little bit higher than that actually. I would say right there, which is 805 or so. So it kept coming up there, and then it just kept bouncing back up there and then getting tighter and tighter right at that price, and then we finally broke out. This is classic. This is what we want to see all the time. And so far, once it breaks out, it's not coming back down, it's not slicing back through, it's not forming a reverse hammer where you have this giant wick and then it's closing over here, which was what we've seen for so long. We want this nice clean breakout. Volume though wasn't good. It was low volume, so that was a little red mark against this, but closed at its high. That's what we want to see. Now sometimes the volume does come in later on, but so we'll see. But this one is looking really good. We're still in the buy range, and earnings are earnings are coming up. It says here was the 17th, but I don't think we had earnings. Or I'll have to find out when this is. Yeah, it must be coming up pretty shortly. Okay, so that's all the stocks on our ready list. The long performer ready list, it has ADP, which we just talked about. And let's go to our watch list. We've got a few here. The first is Agilysys, I think is how you say it, AGYS. This is a software stock, so we're starting to see more names that were traditionally been just hammered over the last year and a half. And this one kind of sort of formed the same tight pattern here with a big shakeout here, which closed up near the highs. That's a great sign. Got rid of a lot of weak hands, they call it, and we're coming back up. And we just broke out right there, but we closed down on the day. So if you were to this at some point during the day, it was actually it moved over to the buy ready list, and then we're back down below a little bit. So this one we're just continue to watch. Probably earnings not for a long time till May, so we'll maybe get a nice pop. But we had earnings here pretty good, 37% on earnings, 27% on the sales. So this is one I would expect will probably turn around unless the market falls apart. Next one is ADIDEA or something like that. ADIA. I don't know how to say it. I'm not quite sure what they even do. It's kind of they says it develops and licenses fundamental innovations that provide to people explore and experience entertainment. I went to their website to kind of understand it, and I wasn't really quite sure. So I don't think the site did the best job of kind of explaining exactly what they do. But we had a big move here, almost 100% move from 6.5 up to almost 12. And then we had this kind of double bottom is formed, and then we've got this little handle, but it's starting to leak off here. Just starting to didn't make a new low, but it's a little concerning there. Earnings are coming up next week, I think probably on Tuesday. So we're watching this. We'll see what happens, but it's starting to look a little weak, so this may just be disappearing off the list. Next one is Triple Flag Precious Metals. Now, this is one of the few gold or precious metal stocks that has been appeared in a long time. And we'll see if we start seeing more of them too. That would mean that maybe that industry group is going to finally make another move. Again, it's got earnings just coming up. A little sloppy here, but let's see, 1432. Yeah, it's kind of like we're just clearing out a lot of this here. There was just a couple days here, especially this one bad day where it went up and closed at its low. But we'd be buying it, clearing all this resistance. We'd like to actually see, let's see if I can draw that line here. Sorry. If you don't draw it correctly the first time, you can't move it. That's these Marcus Smith charts just are not good for that. But we'd like to see this actually kind of just keep coming up to that line and get tighter and tighter like we've seen, and just really be right there before it takes off. Or even on the earnings day, if it opens down on some good earnings and then comes ripping back through, that's the place we would maybe try to buy it. But if it gaps up, we just usually leave the gaps alone, and let's move on to the next one. So that's an interesting one. And also the IPO. You know, these IPOs can usually, if they don't just fail immediately like most of them, you can get some really nice moves because that's new fresh merchandise. Okay, next one is Gilead Sciences. This one's been around a long time. It's a biotech with pretty good earnings and sales. Kind of since 2018, really been stuck in a range. We'll see what happens here. We're trying to get this clearing. Yeah, right at, let's see, 86, 81. Yeah, we're kind of just clearing right above this. This would be maybe a little area where we're wanting to see get past this guy here, which is at, let's see, come on. The high was 87.82. It's a little sloppy, but it's acting really pretty well. Had a nice move on these earnings here, and then we had sort of, let's see, which day was this? Yeah, kind of looked like it was going to fall apart on earnings and just came straight back. So it's forming a nice little cup here, but we're not quite ready there. But we're keeping an eye on it. That's nothing doing wrong. Next one, Globe Life. We just added this one. Again, another one just kind of creeping its way up, but it's getting tighter over here on the right side. We just had earnings, which, you know, it looks like we had a real ugly day. Let's see, when was the earnings right there? Yeah, the following day, I think it was probably after the next morning. We came all the way down, but you know, the people reevaluated and went straight back up. So it looks pretty good. This is one, their health insurance and life insurance company. We're seeing more of these too. So for whatever reason, it's now in industry group 29 out of 197. So this one's looking pretty good, but not quite there. And then the last one we have is Principal Financial Group. Same kind of thing, health and life insurance. So we like the fact that we're seeing more than one. This is forming nice cup with handle. The handle's still forming here. Still has 12 days till earnings, which is okay. Maybe we get a move before that. And we'll see. We'd like to see maybe just another little shakeout on the handle. That would be nice to get rid of the weaker hands. And then we'll see if it can break out. But you know, decent. The sales and earnings are nothing to write home about, but in fact, the last quarter was negative on both areas there. But it's acting pretty strong. Just take a quick look at the weekly. Yeah, it's making new highs. If I go back to the monthly, yeah, we're at all-time highs in this stock. So looks pretty good. So I think that's it for all of our stocks that we're watching and waiting on. And we'll be back next week. That's really nothing more than that. We're still kind of in that limbo land as I talked about, and we'll hopefully get an improving market this upcoming week, and we can maybe start to add some more exposure. But so far, we're just not getting that feedback. We're not really up on most of our positions, and until that happens, we sort of stay with most of our powder dry. Okay, all right. We'll talk to you next weekend. Thanks.